Hi everyone, welcome to an online session of class 12 accountancy admission of a partner. Today we are going to solve a numerical question. Here question: A and B are carrying on business in partnership, sharing profits and losses in the ratio of 2:3 respectively. Their balance sheet as at 31st March 2015 was as under: liability side, creditors 24,870 rupees, capitals A amount 68,100, B amount 68,100, total 1,36,200 capital. Asset side: cash in hand rupees 1,420, cash at bank 23,850, sundry creditors 11,000, stock 36,000, furniture 8,800 and building 80,000. The balance sheet total 1,61,070 rupees. After that, on that date, they admit C into partnership and give him 1/3 share in the future profits on the following terms. Adjustment number 1. Stock and furniture are to be reduced in value by 12.5%. Building is to be appreciated by rupees 15,000. A provision of 5% is to be created on sundry debtors for doubtful debts. And last adjustment, C is to bring in rupees 60,000 as his capital and rupees 40,000 as goodwill, which is to remain in the business. Pass journal entries to record the above arrangements and draw revaluation account, partners capital account and balance sheet after admission of C. Here, first of all, you check the question. What is asked in the question? You have to prepare journal entries, revaluation account, partners capital account and balance sheet of the new firm. First of all, check the balance sheet. What are the items given there? Then check the adjustments. How to prepare the journal entries and accounts. First of all, it is asked to prepare journal entries to record the arrangements, otherwise adjustments. 4 adjustments are there. So, you have to leave space for preparing 5 journal entries. Afterwards, you have to check it whether you are required to calculate sacrificing or gaining ratio. Here in the question, old ratio is given but new ratio is not given. In such a situation, you need not to calculate sacrificing ratio because old ratio will be the sacrificing ratio. Here 2:3 is the old ratio. So 2:3 will be the sacrificing ratio. After leaving space for preparing these journal entries, you have to prepare the revaluation account. Whenever we are revaluing the account, all the losses you have to record on the debit side of the revaluation account and all the profits of revaluation will be coming on the credit side of revaluation account. Here we can see first stock and furniture reduced. Stock and furniture both are assets. So if the value of an asset is reducing, it is loss. So both of these items will be recorded on the debit side of revaluation account. 2 stock, 2 furniture. 12.5%. In another meaning, it is 1/8. Value of stock is given in the question 36,000. Set 36,000 multiplied by 12.5 by 100. Otherwise, 36,000 multiplied by 1/8. Furniture value is given rupees 8,800. Same calculation, 8,800 multiplied by 12.5 by 100. Otherwise, 8,800 multiplied by 1/8. You can record both these items on the debit side of a revaluation account. To stock, rupees 4,500. To furniture account, rupees 1,100. Adjustment number 2. Building is to be appreciated. Appreciated means what? The value of the building is increased by rupees 15,000. So credit side of revaluation account, you have to write that by building account, amount 15,000 rupees. Next, a provision of 5% is to be created on sundry debtors. So it is a loss. Take 5% of the amount given there in the question, 11,000. Sundry debtors amount is 11,000. So 5% of 11,000 you have to take on the debit side of a revaluation account to provision for doubtful debts. Amount 11,000 multiplied by 5 by 100, 550. So 4 items we have already recorded there in the revaluation account. Debit side 3 items and credit side 1 item. To stock 4,500. To furniture 1,100. To provision for doubtful debts account 550. Credit side by buildings account. Amount 15,000. So now you have to check which side is more. Here credit side building 15,000, but debit side 3 amount 4,500 plus 1,100 plus 550. So credit side exceeds debit side. Credit side is more and debit side is less. So 15,000 will be the total on both the sides. Then take the difference. You are getting 8,850. Amount is coming on the debit side, so it is profit on revaluation. You have to write to profit transferred to A's capital and B's capital. The amount we are dividing among the old partners in their old profit sharing ratio. So 8,850 we are dividing in the old profit sharing ratio of the partners. Old profit sharing ratio is given in the question. It is 2:3. So A will get 8,850 multiplied by 2 by 5, amount 3,540. And B's capital account, it will be 5,310. That is 8,850 multiplied by 3 by 5. Okay. Now from this revaluation account, you can prepare 3 journal entries. Journal entry number 1, items which is on the debit side other than this profit. Revaluation account data to stock, amount 4,500. To furniture account 1,100. To provision for doubtful debts account 550. Total will be coming as debit amount. Revaluation account debtor 6,150. Now the first journal entry, revaluation account debtor 6,150. To stock 4,500. To furniture 1,100. To provision for doubtful debts 550. Second journal entry from the credit side, building account debtor 15,000 to revaluation account. Third one, profit on revaluation. Third journal entry will be revaluation account debtor 8,850 to A's capital, amount 3,540, to B's capital, amount 5,310. Now We can see the fourth adjustment. C is to bring rupees 60,000 as his capital and 40,000 rupees as goodwill. We have to prepare journal entry for this also. C is bringing cash to the business. So bank is debit. Bank account debtor. To C's capital 60,000. To premium for goodwill account 40,000. Total will be debit 1 lakh. Now the journal entry is bank account debtor 1 lakh. To C's capital account 60,000. To premium for goodwill account amount rupees 40,000. Now the amount of premium for goodwill will be dividing among the partners in their sacrificing ratio. Sacrificing ratio and old ratio will be the same here because new ratio is not given. So sacrificing ratio is 2:3. Premium for goodwill account debtor 40,000 dividing among 2A and B. 2A's capital 40,000 multiplied by 2 by 5 amount 16,000. To B's capital account 40,000 multiplied by 3 by 5 amount 24,000. These are the journal entries we have to prepare. Now we have prepared journal entries and revaluation account. Next we have to prepare partners capital account. You know that capital account always has a credit balance. So first item we have to write on the credit side by balance brought down. Here now 3 partners are there, A, B and C. So 3 amount columns on each side. A's column balance brought down amount 68,100. B's column also same amount 68,100. Now premium for goodwill account, it is divided among A and B 16,000 and 24,000. So by premium for goodwill account 16,000 in A's column, 24,000 in B's column. Revaluation profit, that is also transferring to partners capital account credit side by revaluation account 3,540 and 5,310. Now amount brought by C as his capital by bank account amount C's column 60,000. Debit side no other item is there, so take the total on credit side. First A total 87,640, transfer this to the debit side. B 97,410, transfer to the debit side. And C 60,000, this also you have to transfer to the debit side. Then balance carry down same amount 87,640, 97,410 and C amount 60,000. Now you will have to prepare new balance sheet after adjustment and admission of C. For this purpose, you have to check the previous balance sheet. What are the items given there in the previous balance sheet? Check it. First item on the liability side, sundry creditors amount 24,870. No adjustments related to this item. So take the same amount as the previous balance sheet. 24,870. Second item on the liability side, capital account. Previously 2 partners were there, now 3 partners are there. So capital account balance you have to take from the partners capital account. Now just now we have prepared the capital account. To balance carry down, what are the amounts there? This is the amount you have to show in the new balance sheet. A 87,640, B 97,410 and C 60,000, total 2,45,050 in the amount column. Now asset side. First item, cash in hand and cash at bank. Here cash in hand and cash at bank is given. So the amount brought by the new partner, it is added along with the cash at bank. Cash in hand will be the same amount. So first item, cash in hand 1,420. Cash at bank, previous balance sheet 23,850. Now it is changed because 60,000 rupees brought by C as his capital and 40,000 as his share of premium for goodwill. So 60,000 plus 40,000 is equal to 1 lakh. This 1 lakh we are adding with the amount given there in the previous balance sheet. 23,850 plus 60,000 plus 40,000. Now the amount is 1,23,850. Now we have to check next item, sundry debtors, amount given there in the question. As previous balance sheet it is 11,000. But the third adjustment provision we have created for 5%. So 550 we have to subtract. So item number 3 on the asset side, sundry debtors, amount inner column 11,000. Less provision for doubtful debts 550. Amount column 10,450. Next item, stock. The amount of stock given there in the question, it is 36,000. But stock is reduced by 12.5%. That amount we have to subtract. If you are checking the previous revaluation account, you can see that stock debited 4,500. This amount you have to subtract from the amount given there in the previous balance sheet. 36,000 minus 4,500. Amount will be 31,500. Next item, furniture. Amount given there in the previous balance sheet 8,800. Amount depreciated, it is 1,100. That's you can get it from the revaluation account. 8,800 minus 1,100. Now the amount column 7,700. Next item, that is building. Building 80,000 is given. But here an adjustment number 2, building is to be appreciated by 15,000. Appreciated means amount increased by 15,000. So 80,000 plus 15,000 is equal to 95,000. Now the new balance sheet, I read all the items. Sundry creditors 24,870. Capital account A 87,640. B 97,410 and C 60,000. Asset side, cash in hand 1,420. Cash at bank 1,23,850. Sundry debtors, amount inner column 11,000. Less provision for doubtful debts, amount 550. Amount column 10,450. Stock 36,000 minus 4,500. Amount 31,500. Furniture, amount 8,800 minus 1,100. Amount column 7,700. Building 80,000 plus 15,000. Amount 95,000. Now the total of the new balance sheet is 2,69,920. Thank you.